And welcome, it's Mary Ellen McGonagle here with your weekly Edge show for Friday, October 6th. First up, we will go ahead and take a look at these broader markets and see where did we close for the week, and then take a look at some sector rotation that's shaping up beneath the surface of the markets. And as always, we'll take a look at some of that headline news that drove price action last week. And then last up, viewer question of the week. And this week, we're going to be taking a look at names in a group within technology. It's going to be software stocks. And we're going to share with you two types of activities that are taking place. One is base breakouts, and the other is down and out downtrend reversals. So stay tuned for that. Now, first up from here, let's go ahead and take a look at some of that news from last week. We did see the energy sector fall quite a bit, and a lot of that had to do with news that the inventory of gas has built up quite a bit. Consumers are pushing back to the increased pricing of gasoline, and we are seeing, and this in turn pushed a number of those energy names lower. We also are continuing to see utilities, staple, and REIT stocks. These are areas that do offer higher yields. They are continuing to deteriorate because of the elevated rate among U.S. Treasury yields. So that is an area that is continuing to trend lower. We also got employment data this week, and on Wednesday we did get private jobs growth news from ADP, and those numbers came in well below forecasts. That did give interest rates a bit of a pause and allowed certain areas to rally. However, it was not until today's U.S. jobs growth number for September that the markets posted a fairly significant gain. We'll get into all of that. And that was despite news that we did see quite a bit in the way of jobs growth. But the good news beneath that was that the wage pressures are continuing to cool, and that those wage pressures had been a big driver of inflation. It's a closely watched metric for the Federal Reserve, and investors chose to focus on that number, which in turn pushed the markets up today. Next week, we are going to see core CPI and PPI. These are both inflation data metrics, and they are due out next week. So that's going to be certainly the most impactful by way of news. We also have several Federal Reserve governors speaking throughout the week, and their comments will be looked at closely as well, because it's all about interest rates driving these markets. Let's take a look at where did the markets close for the week. And here we are. This is a daily price chart of the S&P 500. A couple of key metrics that you'll want to be aware of. First up is the fact that we were able to retain a presence above this 200-day simple moving average, and today's rally pushed this index back above this key 4,300 level. So that is good news. We also closed above that 10-day moving average, another positive metric there. Let's take a look at this momentum with that RSI, certainly trending in the right direction upward. We will want to see it get up above 50 to be ideally to before turning bullish. Also, faster moving stochastics here heading north, just inching above that oversold position. So generally in good standing, not quite bullish yet. From here, we'll take a look at the NASDAQ, and it's going to be a little bit different in the way of the positive positioning or bias here on the NASDAQ. This is something I've been writing about in my twice weekly MEM Edge report, the fact that the NASDAQ was really firming up and ahead of the S&P, and we can see, take a look, we did close above this key area of possible support and resistance. That's good news there. But the RSI is inching toward a close into positive territory. We're just not quite there yet. The faster moving stochastics, you can see it's further advanced more than the S&P 500. And we can see that it is also inching toward a move into positive territory. From here, we can take a look at the underlying 11 sectors in the S&P 500. This is a 2-month daily price chart view, and I have it sorted by this RSI indicator. It's not going to be whippy. It will show you steady progression of these underlying sectors, and we're on the lookout for areas that are newer up to this forefront. This is your areas that are relatively a bit stronger. And then again, your weaker areas, we talked about staples, utilities, and REITs down here. Now, one area that did drop out of this top quartile is energy. Let's take a look at that chart. We can see this deterioration pretty sharp, very high volume, and a break below key support. Now, you could make the case that it is a bit oversold. We saw a bounce certainly in some names today, but overall that downtrend is in place among energy names. Now, up here at the forefront, an industry or a sector that is new to the stronger quartile is healthcare. It's not the healthiest of charts, but the group did exhibit a nice rally last week. And keeping an eye on this, because healthcare is not just defensive anymore. It has pretty large growth component with these medical products that are coming to market or have been in place and are in the beginning stages of reversing their downtrend. So I'm keeping a nice watch list together with that area. And then as we move through, also another area that you want to be aware of is the fact that consumer discretionary is remaining depressed. It did experience this back and fill formation. I'll share with you a view of that retail ETF from the S&P 500, and you'll see that it is still in a downtrend. The heavyweight names certainly among this consumer discretionary area is going to be Tesla and Amazon. And Tesla had a very nice week, up over 4%, but Amazon was mostly flat. So we can see that overall this growth area is still struggling. So from here, let's go ahead and take a look at some more by way of underlying industries and groups to get better tuned in to where relative strength is versus weakness. First up here, of course, the yield on that 10-year still up here at the forefront. On today's employment data, initially we saw a spike in rates, and it got up to that 4.9% before reevaluation and a settling in at about 4.8. Now, we certainly remain elevated, and it was of note that we did see growth stocks rally the most today. So we will see certainly going into next week if we can sustain that. Of course, that would be very good news. As we move through, we can see the US dollar. It did pull back a bit, and however, it does remain elevated. And as we move through, I'll share with you areas that are being most negatively impacted by that height in the US dollar. First up, we talked about the technology sector, and if I didn't, I do want to do so right now, and then we'll segue back into this industry group. So here we are with XLK, that technology sector, and it did turn positive. That RSI is now up above 50, trending higher. Very good news. We are not out of the woods yet. However, we are still below this downward trending 50-day simple moving average. If we can get up above that, confirm a new uptrend. We did see this nice MACD crossover, black line up through the red. So this is another phenomenon that I have been talking about in my report, that tech is firming up. We would ideally want to see a resumption of that uptrend and have this area resume its prior leadership status. Now, going back into these industry groups, here is IGV, the technology software sector, and it experienced an almost 3% rally today, but it too now has a positive RSI and the beginnings of a downtrend reversal in that MACD. So that's one area that is driving technology higher. And then also we can take a look at semiconductor stocks, not up quite as much as software this week, but we can see this nice firming up, shaping up. RSI also in also in positive territory here on the daily chart. So there definitely are names in this sector that are looking quite attractive. I'll get into that in my twice weekly MEM Edge report on Sunday. And as we move through, of course, you do want to be aware of these weaker areas. And I talked about that concept that there are certain areas that are going to be more negatively impacted by that rise in the dollar. Here we have the commodity DBC commodity index, and you can see the sharp sell-off it has experienced, certainly for the most part of this week before this later day. And you can see the weakness that has developed among these commodities. Certainly a lot of that is going to be gold. We can take a quick look at GLD and you'll see how it's really fallen out of favor with that rise in the dollar. We are seeing a bit by way of stabilization. It is oversold, so we can keep an eye out at some point, perhaps next week, for an oversold bounce. Now, from here, I did want to talk about some of these names in the software space and share with you different areas and ways that you could potentially play if we see a continuation rally. So first up, let's take a look at a name that had been holding up really quite well. It is top on my watch list, and we'll see how it behaved as the software group has come back into favor. So this is CrowdStrike, CRWD, a computer software security name. And what I did want to point out to you, it had a significant 7% rally today. And upon that, we did experience a nice 1 month base breakout, nice heavy volume, and then we are in the throes of a MACD black line up through the red, which would indicate a new uptrend for the stock. Now, certainly by most measures, it is extended. We can use historical precedents as your guide. Here's a gap up and not quite into a base breakout, but you can see how it marked time before resuming its uptrend. We can also use this more recent gap up at the end of August. And from here, I'm going to go ahead and add a 5-day simple moving average, and you'll see how helpful that can be as a guide when a particular name does get started as far as potentially trending higher. And it is this blue line. So when you have these gaps up, pullbacks to that 5-day tend to be an ideal buy point. So at this point in time, I anticipate CRWD to mark time until that 5-day catches up, but quite bullish price action there. Let's take a look at another software name that has sold off pretty dramatically, but it may be in the beginning stages of reversing its downtrend. This is Paycom, Payc. We can see this big gap down, and this is in line with other software names that came in with disappointing results and were really punished. And what we can see subsequent to that was continued deterioration. Now, we may be in the beginning stages of reversing that downtrend. We're not quite there yet, but today, Payc did close above this 21-day simple moving average, which would give it certainly room to potentially rally up to this red 50-day. However, we do not have positive momentum with this RSI. You will want to get that up above 50. We are coming out of an oversold position, which gives these names a little more push once they do turn positive. We do have this MACD crossover taking place. However, we are still below that net neutral. So from my work, we are a bit early. And again, you will want to use historical precedents as your guide going back here to this June period as we began to break above these shorter term moving averages. They then began to trend upward and act as support instead of resistance. And then from here, we can also see that we had that RSI in positive territory indicating positive momentum. So we are early, but certainly you can put that on your watch list if you are inclined to trade downtrend reversals. That's it for this week. Everyone have a great weekend. I'm going to look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.